Why do you guys do this to yourself? I don't know how you do it, but the stocks that perform the best in terms of the price action are the stocks that my viewers to this YouTube channel don't want to watch. I mean, I don't know how you guys do it, but the less you are interested in one of my stocks, the better it performs. So let's rewind to 2020, when my channel really kind of took off, was when I was talking about the oil tankers during the pandemic. That was the hot topic. Everybody wanted to hear me talk about oil tankers. And then while I was talking about oil tankers, remember what I was doing? I said, look at Oroco, look at Oroco, look at Oroco, look at Oroco. I was pounding the table to look at Oroco. And what happened since then? Oroco went from 20 cents to over $3. And not much work. That was before they started drilling. And the crazy thing is that the stock came down almost to the same level that it was in 2020. But during that time, the fundamental value of the company is in a completely different place now. Before, they didn't have any new drilling. And now they have, PEA, net present value, and all that. And I'm not trying to get into detail about this. I'm just trying to show you that the thing that you don't want to watch, literally takes off, while you don't want to watch the videos. So then what was next? Then I wanted you to watch Aduro. And it was like pulling teeth. My Aduro videos were the worst performing videos. You guys didn't want to watch it. And then look at this. Since that time I introduced it. I introduced it around 70 cents level, but let me just go from here. It went from 50 cents, today is $2. And now Aduro videos are quite popular, but you guys didn't want to watch it, right? I was like, look at Aduro. No, I don't want to look at Aduro because Aduro is a pre-revenue company. The technology might not work, blah, blah, blah. And then last week, what did we get? They're going to New York Stock Exchange, right? And then they got a collaboration with Total Energy, a $160 billion company, right? Now it's interesting. Now my Aduro videos are performing well. But you know what videos are performing the best? It's Voxtur. Voxtur is performing the best. And now Voxtur is going up. And now you know what kind of videos are performing the worst. Again, you guys don't want to watch it in comparison to others. Plurilock, you don't want to watch it. And look at what just happened with Plurilock. Went from 26 all the way to almost 500%, and now it came off a little bit and is consolidating at this level. And the market cap is still tiny, and you don't want to watch it. And now, I'm not saying I will never tell you buy the stock. Never. Because it's your choice. But I am going to tell you, look at my video. Watch it, because if you don't, this is what you might miss. And I don't know how you guys do it, but you are experts in ignoring the things that are just about to take off, right? And again, I like Voxtur. I like Voxtur a lot, but I don't want to put all of my money in one basket. I really like Plurilock even after it went up, because think about this. Let's draw some comparisons, right? Plurilock is a revenue generating company. Voxtur is a revenue generating company. Plurilock had 70 million of revenues last year. Plurilock is in the cybersecurity space, okay? Voxtur is in the real estate space, right? When it comes to quality of revenues, as of now, Voxtur has higher quality revenues because the margins are higher, okay? Almost 70% gross profit margin. Plurilock has low gross profit margins because they are in the VAR business, okay? They are reselling other people's security products, but they are also increasing the margins because they're cross-selling critical services, right? Now, Plurilock is literally trading for half of the yearly revenues, half. And Voxtur just had announcement that they're selling half of one division for like $40 million, right? And both of these companies have similarities also because most of their revenues come from the United States. And probably both of these companies are going to trade in the United States at some point. Okay? And so now, if you think about this, Plurilock is trading at half of revenues. Half of revenues. Okay? Now, both of these companies trade on a venture exchange. What is a venture exchange? Venture exchange is an exchange for companies that are new, companies that are growing, companies that are going that have a huge, like kind of like startups in a way. So when you are building a startup, do you expect it to be profitable? Like people in Canada, I don't know what's going on with them, but they don't seem to understand the definition of venture exchange because they treat those companies in Canada as if they were as if they were supposed to be stable, mature, cash flowing, net income and all that, like the companies that are trading on New York Stock Exchange on the big board. Like those companies are done. Like they're not in the huge growth rate anymore. So they do, at some point, your company has to reach a level where it has to become profitable, and then it trades based on profitability. The companies on a venture exchange they shouldn't be trading based on what is your net income, because they're not shooting for that. They're shooting for the stars. They're shooting to be big, and they're reinvesting everything, and they're sacrificing profitability. A lot of them could be profitable. I have a business that like it's like you make a pie out of it, like tiny business. It's profitable, but it does $2,000 of revenue per year. Like, is this what we want from the small companies to be profitable? Aduro can be profitable tomorrow and just be a feedstock testing company, but that's not what we want. You see, those companies have so much that they can accomplish, and so they are on this exchange, and they're not profitable yet. Now, both of these companies need to move to NASDAQ or in the US for several reasons. One, most of their revenues come from the United States. Two, people on NASDAQ understand this. They understand growth companies. They understand that eventually they need to be profitable, but they are willing to trade based on some kind of multiple. And it is completely laughable that Plurilock is trading. It should be trading like 5 times those revenues because those revenues are so small. And when you're talking about cybersecurity is a huge market. They have so much growth ahead of it. The same thing with Voxtur. They have so much growth ahead of itself that like they should be trading at multiples those tiny revenues they have because they address such a big market. Okay, and when they move to a better exchange, they have to. I think they're going to get re-rated because you can't find very many companies on NASDAQ that have those kind of revenues and are trading for levels that these companies are on the Canadian Stock Exchange or Toronto Stock Exchange venture, right? It just doesn't happen. So, and also you have to think of those companies as they are an ingredient for somebody else. So if I think about Voxtur has business units that generate $40 million of yearly revenues and almost 70% gross profit margin. There are hundreds of businesses that would love to take that revenue and that gross profit profile and integrate it into their own business and eliminate all of the expenses of a public company as if Voxtur was run independently. They would love that, and they would pay for that because it's a quality revenue stream. The same thing with Plurilock. It's the clientele that they have that gives other companies access to those clients. You see, Plurilock has clientele that other cybersecurity companies would love to have. That's the value that you cannot see on the income statement. Because let's say there's a company that wants to do business with the US Treasury, and US Treasury is a client of Plurilock. Well, they don't have a master service agreement with US Treasury. Plurilock has agreement with US Treasury. So instead of trying to wait 3 to 7 years to become a client of US Treasury, they can go through Plurilock and get that client and maybe have a revenue sharing, right? There's a reason why so many people are joining Plurilock's, whether it's the board of directors or the advisory board, that have incredible ties to like CIA, White House, Palantir, CrowdStrike. There's a reason why they are joining it, because they see value and they also see how they can add value. And you cannot see this on the income statement. So you have a company that is trading at stupid price, half of revenues. That's a stupid price in an industry that is huge. And then Plurilock as a stock, it's like it is a house that is for sale by owner, that barely anybody knows that the stock is listed, because it's listed in Canada. Most of the people cannot buy the stock. Most of the people don't even know this exchange exists, right? So you have a limited number of people that can buy or want to buy, okay? And now imagine a scenario where this company can go, and instead of being for sale by owner, it's going to be listed by a popular broker and exposed to everybody. That's equivalent to like going and listing on a US exchange, right? The management is hinting that, whoa, most of the revenues are in the US. They're hinting us that they're thinking about this, and they're probably talking about this. So now, what do you think is going to happen when they do go and list in the US? And now all of a sudden, you have this company with huge potential available to all these buyers, right? You got to think about that. And then they're going to look at this company, and they're going to look at the board of directors. They're going to look at all the advisors that they have. They're going to look at all the clientele that they have, US Army, Navy, US Treasury, and all that. It's going to get very interesting. So I'm not saying you need to buy this. I'm saying to you, watch my first video on Plurilock. Just like I told you to pay attention to Oroco when you were watching videos about tankers. Then I told you about Aduro. Now I'm telling you about Plurilock. Again, I will never tell you to buy the stock. I will tell you to pay attention, do your due diligence, watch my video number 1. Link is in the description below. Do your work, and then decide if this is something that you want to get involved. But don't ignore it, because ignoring it, I don't know how you guys do it, but every time you ignore something, the stock soars.